What's up, what's up, my Mind Your Money business folks? It's me yet again with another video on today's stock market news. And as always, hopefully you're in the market and not trying to time the market, because that is simply impossible to do. And hopefully you're investing, you're not straddling the fence, you're getting rid of that debt that's suffocating you. Breathe. Anywho, so what did the stock market do today? Whew, I'm hot. It says here that the Dow, S&P 500, Nasdaq climb to cap winning month as strong earnings easing rates fuel Amazon tech stocks. This month was a great month, people. There's an upcoming... No, that may not be true. Okay, I should have looked at that. Anywho, it says U.S. stocks bounce back Friday with Wall Street notching weekly and monthly wins as investors embrace strong earnings from Amazon. Amazon had a good day today. They eased some doubts about prospects for big tech because, you know, big tech is driving the market. The Amazons, the Meta, the Microsoft, the Googles, the Nvidias of them all are driving the market. Your money is being made in those stocks. So it says here the Nasdaq rose 0.6%, the S&P 500 gained 0.3%, both restoring solid gains after waving earlier in the session, and the Dow rose 0.1%. Not as much, but they rose nonetheless. That's why it's good to be invested in all of the market and not just in one part of the market, so you can get gains everywhere. And, you know, your portfolio will be nicely diversified. So all three major indexes ended the month with wins, with the Nasdaq gaining more than 4% for the second month in a row. The tech-heavy Nasdaq index scored a seventh consecutive monthly victory, while the S&P 500 and Dow notched their 6th month of wins in a row. All three indexes ended with solid weekly gains as well. I'm telling you, people, you need to invest into appreciating assets like the stock market, like real estate, like yourself. Invest, invest, invest smartly. Dollar cost average in. Do not invest anything that you can't afford to lose as well. So remember that. So make sure you're solid, your foundation is solid. Get out of debt. You know, because the government, see, things keep popping in my head. Like, the government's still shut down. Like, we're supposed to get paid next Friday, and I don't believe we're going to be paid next Friday. But because I have no debt, I have a solid foundation, I have an emergency fund, that's what I'm living off of. And also, I'm retired military, so I still have my retirement pension coming in. So that helps me. So I make sure that I budget all of my money, always. Because there are a lot of people that have a lot of money coming in. They may be retired military, they may be retired from a job, they may have another job, and they're not budgeting their money. Even though they have great income coming in, they're still living paycheck to paycheck. And I refuse to do that once I got out of debt. I would never, ever do that. So, fresh Magnificent Seven earnings reports rekindled optimism for sustained growth for tech megacaps, easing concerns about overspending in AI infrastructure. AI is driving the market, like Nvidia of them all, the AMD, the Palantirs, the Metas, the Amazons, the Microsoft, Google. They're spending billions, hundreds of billions of dollars in AI technology. So here's the thing. We as retail investors or just consumers in everyday life of buying things from the grocery store, like you're buying the bread, you're buying the milk, so you're putting money in the company's pockets, and these organizations that are providing those goods and services to the grocery stores, those are the companies that I'm investing in. Anywho, like how you're spending money in the economy, you're putting money into the company's pocket, and because I'm invested into those companies, as they continue to grow and more money that consumers spend, you make them more money, and then because of that, the product continued to rise. The company continues to grow, and as they grow, the stock of that company grows, and then I am making money because of that growth. But these companies are also, these same companies are then turning around and taking the money that they're making, and they're spending billions of dollars in AI from NVIDIA, from AMD. They're creating things within their own companies. So as they continue to grow and invest into other companies, because those companies are growing, that means my investment in those companies as well is growing. But it's growing expeditiously, or it's growing a lot higher than average things, because they're spending billions upon hundreds of billions, right? So you're missing out on that growth if you're not paying attention and not invested into these products. And I hope all of that made sense, because now that I think about it, I don't know if it does. Bottom line, invest. Do your research and invest. So Amazon shares rose 10% and closed at an all-time high after its third quarter results easily topped analyst forecasts. In particular, its cloud division, Amazon Web Services, posted a 20% jump in revenue, signaling renewed strength in enterprise demand. So, how many of you order from Amazon? How many of you have Amazon Prime? And then how many of you are invested in Amazon? Why are you not invested into these companies that you're spending a lot of your money into, or a lot of your money on or in? It makes sense. Like Amazon is a part of the S&P 500. I have S&P 500. I have Amazon Prime, but I also own parts of Amazon. So it's like the money that I'm spending in Amazon, I'm getting back. I'm getting a return on my investment, so to speak. So there are a lot of people that aren't doing that. They're using Johnson & Johnson products, but they don't invest in Johnson & Johnson. And Johnson & Johnson pays a dividend. They're buying McDonald's every day, but they don't have any McDonald's stock. McDonald's pays dividend. They're buying from Starbucks every day, but they don't own any Starbucks. You get what I'm saying? You need to own parts of these businesses. And then you also need to understand the tax benefit from owning these things. And we're wondering why the rich don't pay much in taxes, because they own businesses and corporations where the system is built around business owners. That's why someone can make billions of dollars and hardly pay anything in taxes, but someone that being paid a $50,000 wage, they're paying more taxes because you are a worker. They are a business owner. So pretty much the owners of businesses provide more value than, say, the average worker. It's not fair, but it is what it is. It's the way the system is set up. And it's just not fair. So either you learn from it and participate, or you stay where you're at and complain. But just know that complaining is not going to get you anywhere. Anywho, Apple also tapped its own record on the heels of stronger than expected results and upbeat guidance for the all-important holiday quarter. The stock hit above $277 shortly after the market opened, but quickly reversed direction. Elsewhere in tech, NVIDIA shares fluctuated as the company made a fresh push into South Korea, saying it would supply as many as 260,000 of its AI chips to companies and countries and the country's government. NVIDIA is the leader in AI. So, meanwhile, shares of Netflix held onto gains after the media giant announced a 10 for 1 split. Oh, that's the split, not NVIDIA. So Netflix is growing. Netflix, wow. Okay, Netflix. Oh, because it's, oh shoot, yeah, they are at $1,000 right now. I may have to buy some Netflix before they split. Interesting. Okay, I didn't know that. But hey, yeah, the stock is going to do a 10-to-1 split. So right now it's $1,089. So that means when it splits, so just divide 1,089 by 10. So when the split comes, it's going to drop to $108.90, essentially making the stock cheaper to buy. So it looks cheaper to the retail investors, but it's still $1,000 in a sense. Because just think about, I remember when Netflix was, $245, and I didn't buy it. I was new, and this was just 4 or 5 years ago, and now it's at $1,000. So I missed out on a ton of gains. But anyway, you can't. What I'm learning in investing, you can't participate in everything, and you can't catch every growth stock. So just stay the course, stay where you're at, because I'm still doing good with what I am invested in. So that's what I have to remind myself of. Anywho, Federal Reserve officials stepped up to speak for the first time since this week's meetings, which brought an interest rate cut and revealed deepening divisions among policymakers. Kansas City Fed President Jeff Smith said he would have preferred to hold rates steady, as inflation is too high. Dallas Fed President Lori Logan, who is not a voting member this year, said Friday that she would have preferred to hold steady. So traders are paring bets on rate cut in December. Just over 60% now expect one, compared with over 90% just a week ago. But we'll see what happens. If it does, it does. If it doesn't, then it doesn't, right? Wow, Meta lost. So let's go and see what happened to stocks today. Meta lost $18.12 today, closing out at $648.35. Palantir gained $5.92 today, closing out at $200.47. Broadcom lost $6.84, closing out at $369.63. FTEC, an information technology ETF, gained 66 cents, closing out at $236.46. What else? Nvidia lost 32 cents today, closing out at $202.49. Let's see what happened with Palantir. Palantir gained $5.92 today, closing out at $200.47. What else am I missing? Oh, Tesla. Let's see what happened with Tesla today. Did I not type it? Bam. Okay, that's not Tesla. Sorry. Oh, okay, I see what happened. So Tesla gained $16.46 today, closing out at $456.56. Yeah, and that's it. And as always, people, my normal spiel, you need to get out of debt. You need to get out of the personal loan debt. You need to get out of the car loan debt. You need to get out of the credit card debt. You need to get out of student loan debt, because as long as you're in debt, you are a slave to the lender. That means you will never be free. You will never be able to do what you want to do, because you're bounded by that debt. You will never be able to create any financial future, a good financial future for you or your family, as long as debt looms over your head. And then if you don't pay that debt, and then you roll up out of here, you transition out of life, those debt collectors still want their money. There will be liens placed on your holdings or your whatever you own, and your family members will be left to deal with that. Also, have life insurance. I see too many people transition out of this life, and then they're GoFundMe because there's no money available to bury that individual. So make sure that you take care of yourselves. Make sure that you are investing. Make sure that you're getting out of debt. And the way that you do all of these things is by creating a plan. But first, you need to be disciplined enough to get out of debt. And you do that by creating a budget. The rich aren't rich just because they're rich currently. It's one thing to be rich, and then it's another thing to be able to maintain your riches. Like, we've seen a lot of people gain a lot and lose it quickly. When you get too much quickly, in my opinion, you're going to lose it quickly when you're not aware or know how to manage what you've now been given. So that's why I believe in slow growth. I'm into investing for the long term because I am learning a lot as the time progresses. You see, I've seen so many people crash out, lottery winners, entertainers who get a lot really quick, and then you wonder what happened. Their mindset. That's why this channel is called Mind Your Money Business, because it's not all about money. It's not all about investing. It's not all about wealth. It's all about changing your mindset. You have to change your mindset. You know, if you think you can, then you will. If you think you can't, then you won't. So don't even waste your time watching this video. If you don't think that it's possible for you to be able to invest and grow wealth and create generational wealth, don't even waste your time watching. So again, you have to change your mindset. And wealthy people have discipline. That's why you could pass by a billionaire, may not know it. You know, only people with new money are people that, well, a lot of people, not all, but some people, let's just say some people, the new money folks, they're showing you what they have because it's new to them. But once you get used to it, like, how much can you continue to flash? And then you have pretenders, those that pretend to have a lot when they don't have nothing really, but a ton of debt. But it looks nice on social media, right? So you need to figure out which one you want to be. Regardless, change your mindset and you change your future. Anything is possible as long as you believe. Anywho, like, comment, subscribe, share this video. Let me know what you think. If you think anything at all, if you need help creating a budget, let me know. I can help you out easily. I'm just a phone call away. Also, a disclaimer, I'm not a financial advisor, nor am I pretending to be one. So any and all information on my channel is for entertainment purposes only. So please consult with a financial advisor before you invest any of your hard-earned money. All right, so you guys take care. Have a blessed day. Peace, and be safe this weekend.